The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Folks, we have a 61% retracement now in crude oil as we come into the show today. I'm bringing that to your attention because it is a really strong support. The reason I'm not buying here is because there's, pretty widespread selling across all commodity classes. And so I would prefer to wait and see if this thing is going to hold. That's basically it. If you buy it here, your risk here is probably 30 to 40 pips would be my guess. But frankly, I would rather see it bounce here and then maybe buy a pullback or something like that. I mean, we had a quick $8 drop in gold about 20 or 30 minutes ago, and also silver. And so I would think that it would be best to. I'll put that chart in. I didn't put it up. I'm sorry. I was getting ready to do the talk on. Just give me 1 second to put this in here. There's the oil, and you'll see that we're down here at 42.83 or 42.78 right now, and that is the 61% retracement on this move down. We were weak yesterday, of course, once we broke 44. And now we're coming down because if we bottomed on the 24th in the crude oil, and then we rallied to a 50% retracement. As you can see, it was a really nice ABCD pattern up there near $51 a barrel, and a nice little butterfly pattern on the daily chart. And look what's happened. I mean, we've just literally rolled over. But you can see that the overall complex, gasoline futures and heating oil futures are also lagging badly. I mean, it's, there's gas is much cheaper than $2 a gallon, all across the middle states of America. We're 208 here in Tucson, so, gas prices are still coming down. So oil prices are continuing to weaken. So my suggestion would be is to wait to see if this is going to hold. Let's get back to the natural gas contract. I think we need to talk about that for a couple of different reasons. First of all, the main reason is these patterns that I work on. I mean, they are so far from being perfect. It's unbelievable. I mean, the statistics are okay, but they're not anywhere near perfect. At best, you might get something in the 80% category. Those are the three drive to a top patterns that are perfectly symmetrical. And when you have a 5 ratios coming together like we had in the British pound up at 158, those are the kind, and in the stock market at 2137, those in the S&P, those are the kind that have a higher probability. But even those, are only probabilities. I mean, none of these are certainties. Let's just take a look at what's happened to natural gas, and then I'll tell you a quick recap of a story. I don't trade natural gas very often, but it's a really good contract to trade. It's only $1.10 per penny. So when you're trading at 2337, if it drops 1 penny, it's $110. But as you can see here, we had a really nice pattern where multiple ratios came in at the 230, 231 level, and that was coming into Friday. And of course, Sunday night, the market gapped down 8 cents, which was $800, and that went through all those numbers, and it stayed there for probably about 2 hours. And hung around between 2015 and 2020. And then once it went back below 2015, it just kept falling and falling and falling. And if you looked at this chart right here, it's so far off the end of the bottom of this, you can't even imagine. I believe we hit 190 in natural gas. And, that's a tremendous move down. But that is nothing like what happened in February a couple years ago. We were trading up around 6, and it was coming into expiration, and there was all kinds of rumors about how natural gas was going to have a short squeeze on and go to $7 or $8. And we were watching that at the time, and the market made a slightly higher high by, I think, 1 penny, and then immediately rolled over. And when it did that, it was making on a smaller time frame, I believe on a 15-minute, as we were watching at the time, the market was making that 3 drive to a top pattern, and then it started to fall, and it fell $10,000 a contract that February in one day. I mean, that shocked everybody. I mean, we had a 10% move down yesterday in the natural gas, and then we've had another, looks like another 5% today. So we are down, 25. We're down about a 25% of what we were at that time, but it dropped, I believe, I think it dropped 40% in 3 days in natural gas, and it just continued to go down and make new lows. So trying to find a bottom in natural gas right now. You don't have to find a bottom. Let the market find the bottom for you, folks. That's the main thing. You've got to have a lot of numbers and a lot of patterns there to have the confidence to see whether these patterns are going to hold. This is not happening in natural gas now. I mean, it is. It certainly doesn't look like it has the ability to hold in here. Now we're taking out lows from several years ago, so there might be some support coming down into this area, and we'll see if that's the case. May I have a test here, please? Is anybody here at TFNN hear me? I'm getting notice that there's no sound, and I think it's okay, but I don't know. Uh-oh, that's okay. We seem to be okay. All right, that's a big 10 for. Okay, let's. Anyway, that's what I wanted to cover with the natural gas. That these patterns, they fail, and the ones I'm looking at, of course, in the stock market, is indicative that they could fail too. Because if we go screaming higher than where we were last Friday by anything more than 0.25% in any of these things, this will tell us that these numbers are not working and they are going to go a great deal higher. We do have a full moon today. If you went out a chance to look at it last night, it was one of the most beautiful harvest moons. It's the last of the harvest moons this season, and it was really spectacular here. It was almost like daylight out here in the desert. You could hardly see the stars. It was so bright. Okay, we had some more information now on that open interest that I've been following in the commodity. Excuse me, 1 second, folks. On the CME open interest in the S&P and the equity indexes, and I wanted to bring that to your attention too, because we're starting to see. 1 second. All right, let me post this in here, and then I'll chat about it. Every day in the afternoon, usually around 5 o'clock Tucson time, which is 8 o'clock in the east, the first thing I do is I go down into the data sources for the CME. I just type in CME, and I go in and I go into there where it says, what do you call it? We also have apogee today too. Thanks, Marshall. That's when the Earth is as far away from the Earth as it possibly is, and you have a lot of earthquakes happen around apogee. And I think we just had one a couple days ago in Afghanistan that seems to be a pretty bad one, but that's neither here nor there. But what I do is I go into www.cme.com, and then all you have to do is to click on data. And then when you click on data, the information that you're looking for is right there. It'll say volume and open interest. So you click on volume and open interest, and then just scroll down, to what you want to see, and it'll show you what the open interest changes were for that day. Now, for those of you that are not familiar with commodities, that's right. I don't think it is apogee, because it would make it a super full moon, and this is not a super full moon. I believe it's got to be perigee, if anything. And yeah, it's got to be off by a day. It's perigee. It's with the Earth as near as it Earth. Because on the super full moon that we had on the 28th, that's when we had everything lined up. It's got to be on the same day. And this is just, this is a little farther apart. But anyway, that's neither here nor there. Okay. And anyway, we go to the CME, you need to check the data. And if you have open interest, if open interest is rising and prices are rising, things are bullish. But if you have prices rising and open interest decreasing, that's not as bullish, because that means people are leaving the market. The only reason that open interest drops is because shorts cover and new buyers don't come in, and they don't cover the they don't cover the difference between the open interest. So when you see open interest dropping, that's a bad sign. If you'll remember back on when gold was at $19.30 per ounce and silver was $49 an ounce, we were seeing big decreases in open interest as the market went higher. A classic short covering rally of the last $80 or $90 in gold and the last $3 in silver. And then once that was over, the market had a huge vacuum in it, and it started to go down. Being the full moon today after the big run we had on Friday, the market's acting, the stock market is acting relatively well. It's given up very little. The Nasdaq's given up almost nothing, and the Dow's given up maybe 100 points or so, but nothing has really happened, with that. I still believe the things that I talked about on the show yesterday are correct as far as the numbers that we were looking at, and also the stocks of Amazon, Microsoft, Google, Disney, and Facebook. All of those patterns are still complete, and as long as they don't go screaming ahead, especially in Amazon, Microsoft, and Google, then there has a chance for this to be a super retracement top, because we've not made new highs yet, and we're seeing non-confirmation, of course, in the transportations and in the utilities, and then we're over this Bradley date, which is today too, but it might take a day or two, for it to kick in. The one thing that would make this scenario be correct, and that would be an outlier event. I don't know, it could be a military conflict, it could be something natural, it could be something economic, it could be a currency devaluation or an assassination. I mean, I don't know what it could be, but if something like that happened to shake the market, that would tell you that top that I'm thinking that could be here would be in. But that's not happened yet. But it would take something like that, to really to tell you that, then something really has happened over this major time zone where all of these things have rallied up into Fibonacci's. But I haven't seen this many ABCDs patterns in a long time. I mean, there's a bunch of them there. Okay, we're going to take a little break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to talk a little bit about gold here. We're 8 days down from the high we made up at the 1192 level. That was the ABCD swing from July 27th into that high up there at 1192 is perfect ABCD. It just lined up just very nicely. It was also 78% of the high from May and 50% retracement from the high back in February. It was also the second strongest rally that we've had for the year. If you remember, we had another one that was $170, as you can see, back in from November last year until January. We rallied $170. If you'll see that in November of last year we were making a low, and if this is this case, we could be coming down into a short-term cycle low here since we're down 8 days. Now the support that I'm looking at here comes in at around 1153. That's about $9 from where we're trading right now. Silver's down. And silver's not really down very much from the high was 1620, and we're trading around 1580. So silver has not really backed off very much. So this is telling me that this market's really got a chance to rally in here. All I'm waiting to see is today is an important day because the moon really moves the silver and the gold, and that's one of the things that you want to keep a remember on the 28th when we had that super full moon, gold went from 1153, it dropped $50. $50 an ounce down to the 786 at 1103. So being the full moon today, possibly, there could be another big sell-off in gold, taking it down a little bit more. But I want to see if it can hold that support between 1157 and 1153, because being down 8 days quietly like this is usually a very good sign in a bull market, because that means there's not much selling to push the market down. And with other commodities getting hit pretty hard, gold is holding up relatively well, in my opinion. So we'll see if this is going to be the spot. But watch it really closely between 1157 and 1153. Those are the ones that I'm looking at with the most interest from that area. Now, I wanted to, 1 second, please. I need to I had prepared a really nice couple of charts on this natural gas going back, several years, to show you some of these incredible moves that this thing happens. But I did want to show you one that I think we all need to remember and learn from, because sometimes we think what's happening is really going to be is going to come to fruition, and it doesn't, because all of our frustrations in life, whether it's in the market or in a movie or whatever it happens to be, children, spouse, whatever it happens to be, come from unfulfilled expectations. And as you can see here, it looks like natural gas is going to have a pretty nice bottom down there at 230 with a nice little, butterfly bottom. And in fact, it turned into a vampire bat. And, once we start gapping like that, and we've gone, this chart shows it at 202, and we're already down at the 190 level. So that tells you these things can go very far. Another perfect example of that is the perfect storm that happened on Thursday and Friday. We had, pretty strong Fibonacci resistance at that 220 level in the S&P. And what happened? We had the, ECB came out and lower interest rates, or, they're going to do stimulus. Then we had, earnings from Amazon, Google, and Microsoft all at the same time. And that sent the NASDAQ 100 points higher after the market. And then we had, on top of that, we had the Chinese come out and drop interest rates by 0.5%. So you don't know what's happening in these markets, because these news events that we have can really trigger something. So you've got to protect yourself. If you don't protect yourself, what you're doing is you're telling Mr. Market that, Mr. Market, I know where you're going. I don't have to worry about you anymore. And believe me, heed the words of my old friend Roy Longstreet. Markets are seldom wrong. Men are often wrong. And that is something you should learn to live by, because these are only probabilities. They are very, very, very far removed from any certainties at all. And anybody that tries to tell you that there's certainties, is just, that's bogus. In fact, someone sent me a invitation for an email where someone was making 800% a year for 3 years in a row. Why don't you try compounding that for 10 years and see where they would be? They'd own more money than the Federal Reserve by 3, I think. Anyway, we're going to take a little break here. We'll be right back, and I'm going to go over some of these larger stocks that we talked about yesterday.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we have a caller from New Jersey. Vince, are you there?
Yes.
How are you, my friend?
TC cards. You went to the mail. Does that sound familiar to you?
Yeah, somewhat. Yes, I sure do.
Yeah, they were the altar boy prayers before, the doormats. So how you doing?
I'm good. What can I do for you, my friend?
Well, I missed your opening, and I'm wondering about the market. Are we going up, down, bear market so far?
Well,
now, usually
so far,
you're a nice opening.
Well, I think we have a potential for a top end here because of the full moon that we have, and we've reached some major areas of resistance on some of these things with the Dow Jones and the S&P and some of the things that are happening. So, but other than that, it's still too early. You have to have a down week this week, Vince, in order to say that there is some probability of a high coming in that came in last Friday. But there was so much emotionalism. That's usually what happens at highs and lows. That was basically a reverse of what we had happened in March of 2009 when they were scaring us to death about the banks failing and the system falling apart. And I remember that very vividly because Paulson was in there telling us that the end of the world was at hand. So all you have to do is wait till Friday and see what happens. If we're down on Friday, we have a pretty good chance of going lower, would be my guess.
Okay. Apparently we're suffering from the same malady right now. I got the warning
you sound
voice.
like it. Yeah, why don't you get some rest, my friend? That's always good to have,
Why don't you get rest? I get nothing.
I'm going to next week. Next week will be my rest week, I believe. That's what I'm going to be looking at.
But you are coming back.
Oh, sure, of course. I just need a couple of days off to get my throat going back. So no, I should be just fine. Well, listen, thank you very much for calling in, Vince, and always keep us in your prayers, okay?
And I will, Larry. Thank you.
You bet, my friend. Thank you. Glad to hear from you, too, by the way. Okay, folks, what I'm going to do now is I've had a request to take a look at some of these stocks that we were looking at yesterday, these big ones that run the NASDAQ, which we know is very, very skewed to the large price stocks. But the first one, of course, is the Amazon. And we had that big gap up of $70, stopping right at the 127. It completed two ABCD patterns. It closed near the low of the day, but yesterday it did not gap down, so there was no island reversal. Today it's trading in the 600 level. If it gets above the 630 level, this pattern is totally wrong, but it has a lot of things to tell us that yes, this could be, a space to do it with the emotionalism that we had. Remember, we had a perfect storm with Amazon, Microsoft, and Google all coming out with monster earnings, all at the same time. Now, the one on Microsoft, which is one of the largest cap stocks in the world, is also very important because we hit the exact 1.27 on Microsoft on Friday at that 53.82 level. And that's that 1, 2, 3, 4, 5 expanding triangle that we look at. And if you'll take a quick look at this chart on Apple going back into July, November of last year, you'll see the 3 drive to a top pattern that we had, and it also was the 1, 2, 3, 4, 5 expanding triangle at the same time. Now that's one of those situations where you're going to get a high probability because you have 2 major patterns and 5 ratios coming together excuse me, all at the same time. And that doesn't mean it's going to work. It just means it has a higher probability of working rather than failing. And so that's what we're looking at here. Now we have this huge gap in Microsoft. And go back and look at this chart. Go back as far as you want. Go back to when it started trading in 1982. You're not going to see very many gaps in Microsoft. So these gaps are filled. These are emotional things that people get involved with, and then after a few days it dissipates, and then that's it. But if one of these days, either not today, but possibly Wednesday, Thursday, or Friday, you get a sharp gap down in some of these things, you're going to leave some really serious island reversal patterns that are going to take some time, for them to really look at. Now, I've asked talk about Apple. Unfortunately, I'm not able to put the Apple chart up, but I know what it is. We got up to that 115 level. I believe it's trading at around what is it at? I think it's trading at 190. I can't forget. Around 1114 now in Apple. But the earnings come out for Apple today, so that's a game changer. Those you can't argue with the way these things act into these earnings. I mean, look at Microsoft, Google, and Amazon. I mean, all of them. I mean, they went absolutely crazy, and they could easily, do that again with Apple. And Apple's the largest it's the largest held stock in the world. So, that's it. The old high was at 132. That's only a 10% move or a 15% move in the stock, and we moved 10% in the big ones on Friday or Thursday afternoon. So who's to say that that can't happen again? The market is down a slight amount from those highs on Friday, but nothing to write home about. The Dow is down little more than 100 points from the high, not much more than that, and the S&P is down around 18 handles from that. And so, there's no major selling coming in here, and why should there be? Everything looks so wonderful. It does. I mean, just look at it. It just looks fabulous. But there's some signs that, you got to pay attention, at least from the technical part. And one of them, of course, is that open interest that we're seeing in the equities from the CME. I think that's very important because you're talking about, a lot of people in there trading, and when new traders don't come in or new buying don't come in, that leaves a vacuum, to the downside. We're also we looked at Microsoft, Amazon and Microsoft. Now we'll take a look at Google. That's probably the second greatest stock in the world, following Apple, and we'll see what we're looking at here. We also had that big move that stopped at 730 per ounce per share, and we're still in the 700s. We've been here for a couple days now, so anytime, if this should happen, and of course we could get a gap up and it would nullify all of this, but if we get a gap down and leave an island on any of these big ones, this would be an historic event in technical analysis. I don't know whether it's going to happen or not. All I know, there's a lot of time symmetry coming in here, and it's also the fact that we have this situation where we're looking at a lot of different things. And if we looked at the main market, which is the New York Stock Exchange Index, you can see this still has not made the 61% retracement. It's certainly completed the ABCD. It's completed a little three-drive pattern from October the 12th. Over the last 10 trading days, we have made a ABCD pattern. It still has not reached the 61% retracement. Now, this is the overall, the stock market, the really broad market. The NASDAQ is really skewed, by those 5 stocks, because those 5 stocks is over 40% of the value of the NASDAQ 100. So you've got 95 stocks in that thing that don't really make a whole lot of difference, and that's a big difference. But as you can see from what we're looking at here with the NASDAQ, I'm going to put it up and let you take a look at it, that we had that monster move after the earnings you see just a few days ago, and we're still within just a few. We went a tad bit higher than that, but we're still in that zone where these things they still look bullish. I mean, the NASDAQ certainly sure looks bullish. I mean, nothing has happened to that, to really to make a difference. Now, we've had some divergence, of course, with things that used to be the leaders, and one of them was the IBB. And you'll see the biotech index has not been acting well. It has even made a 38% retracement from the high. If we look at the Russell small cap, you'll also see that it hasn't even been able to take out the high from September the 17th, which is something. Oh, by the way, we're going to have Norm Winsky on the show on Friday. It's the 37th year of his publication, Astro Trends, and it's a very, very interesting show. So try to pay attention. He's always has some good information for us. So we'll want to have him on the show. And I'm going to have Rich Anderson this week. As soon as I get him available, we have a potential. 1 second, please. An El Nino. Which is the southern hemisphere currents. They affect they affect weather all across North America, and it's supposed to be one of the largest El Ninos ever. And this will have a great deal of effect on rainfall and also on crops. And I would imagine this year we're going to have torrential rains all across California, which are good to give them water, but it's going to be bad because of the mudslides, because they don't have any cover there. And with the fires that they've had and everything, a lot of rain, which is what they need and what they don't need. They need a gentle rain, not a monsoon-type rain. That's probably going to cause even more problems in California. But we'll try to have Rich on, because he is an El Nino specialist. He really follows it very closely, and he has a couple of clients that are weathermen, and so it'll be interesting to have him on also. Now, the other one that has been lagging the market has been the banking index, but it started to come back along with everything else on Thursday or Friday, and had a pretty good move. But again, it hasn't even made a 50% retracement of the whole move down. So we are seeing signs that there's a possibility of this happening, and that's the whole key. But the emotionalism across Wall Street, I watch Bloomberg every morning just to see what has happened overnight, as far as any major news announcements, and that tells us that everybody is pretty much confident that these central banks have our back and everything is going to be okay, whether it's Japan or Europe or China or the United States. It really doesn't make any difference. That's the bottom line of what we're looking at. Now, I wanted to spend a few seconds here hold 1 second, please. I want to spend a few seconds here on, well, a little more than that, I guess, but I want to look at the euro, because the euro is at a real critical spot. We came down really hard after the People's Republic dropped the rates and made the yuan go crazy, and then also the euro. But the euro stopped exactly at the 786 retracement of the low that we made, back in on July. That was at that 110 level. We've only had 3 small rallies since that time. That was Friday, and we've been all through Sunday, Monday, and into Tuesday. And we've had 3 70-pip rallies is all we've had so far in the euro. But if we get the euro above that 111 area, there's a possibility that low is very, very significant. I think we're still going to go lower because of those long-ranging bar that we had last week. But there is a slight possibility that we could get a rally all the way up to 112.50 and maybe even as high as 113 in the euro if it does that. But any close now or any movement below 110 now is going to send the euro down to that 107 level, which I think it's going to go to without any trouble at all. So we'll see how this market is going to hold up here. So we're here in the first hours of the day here. We've got the stocks, Dow's doing very little. NASDAQ, of course, is very strong. And we've got the S&P is up down about 3. And we've got gold has come back a little bit. And silver's only down 4 cents. So there's a possibility that we might be turning in that level. The crude oil has so far held at 42.81. And that's about it of the major things that are happening that we see going on. Very little movement so far, and it's basically the NASDAQ, of course, that is keeping the market up. I mean, it just doesn't back off. As soon as it backs off just a little bit, there's just not much happening. Even the DAX that we talked about yesterday has held that big 61% retracement at 10,850, but in fact, it's only 100 points down from that, and believe me, 100 points in the DAX that can be a heartbeat. It can move very, very quickly, and it just goes very fast, and you won't realize it. It's back to where it was. So we'll see what's happening here. People have asked me about the data that comes through, folks. This data that they tell you whether it's related to inflation or whether it's related to GDP. I don't believe these things because they massage them so much. Who knows what's going to happen? Okay, we'll take a little break and we'll finish up the show.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're getting an early morning bounce from the market's lower opening. The Dow has rallied about 60, 70 points. The S&P about 6. And, of course, the NASDAQ is not very far from its old high, about another 15 or 20 points higher. So we'll see if that's working. The rest of the market, of course, is still under a tiny bit of pressure, but not really much to look at. We've got a little bit of a bounce in gold here. The question is what happens if gold doesn't get down to this 1157 area that I want? Where will I buy it? Well, I'll have to wait to see if it's going to try to break out, and then I will watch it there. But we're 8 days down, so we're certainly oversold, and I'm still going to wait for the 1157, 1150, actually 1153 is what I'm looking at. From that level is what I would be watching very, very closely. So we'll just see what's happening. We're almost at new highs now in the NASDAQ. I ought to do a double check here, because if we are making new highs now in Amazon and some of these others, this is going to affect what I was looking at as far as a potential, these patterns stopping. No, that's Amazon hasn't done very much, and I know Microsoft isn't doing much. So let me check Google here, and then that is still in play. So it's just probably one of the other stocks like Gilead. No, nothing's happening with the with Google. It actually it opened down a little bit, so not much is going on. So that's still pretty much in effect as near as I can tell. So just wait and see. I don't think if the NASDAQ is going to run away if it makes new highs, because the big stocks, and it's probably Apple that's doing it, and believe me, Apple is, I believe 15 or 20% of that index. So 15% of that index. So just Apple itself could get the index into new high ground. And of course, with their earnings out today, I think 90% of the time that earnings come out, the stock gaps up. So you don't want to. I don't think it's 90%, but I know it's better than 70, and that would be a pretty good sign. But it looks like they're getting ready for some really good numbers in the iPhones. I understand that the central banks are going to start buying iPhones to prop up the NASDAQ. If you believe that, I still have 10 shares of the Brooklyn Bridge for you. Live every day in an attitude of gratitude, and may God bless, and do something nice for someone who has a lot less than you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.